So how do you really use life insurance in your retirement planning? That's what we're going to talk about in this video today. And by the way, it's not exactly what most people teach you, so tune in. All right, so you might have heard people using life insurance as like this supplemental retirement and trying to use it for retirement. Is it really the best thing to use for retirement? Is it the thing you should be doing? Should you be doing something else? Sometimes this is confusing because how do you know the difference between what a life insurance agent is just trying to sell you versus what's actually in your best interest? That's what I'm going to cover today. And just so you know, I'm going to cover what I think are the best retirement strategies to use and how you can actually retire much younger than your 60s and 70s. All right, so first and foremost, you got to understand this is that life insurance can be so much more than just a death benefit. Now, granted, if you buy term life insurance, the typical thing you might buy through your company, at your job, or your work, the typical thing you might buy, the cheap thing from an insurance salesman, from State Farm or whatever it might be, it's always the death insurance, right? It's always protecting somebody else in case you die. You get paid nothing while you're alive. It's literally just death insurance. We're not talking about that right here. We're talking about life insurance specifically. Whole life insurance is like the best tool you can actually be using to be able to protect your family. Yes, have a death benefit, but also have this living benefit as well. And I'm not just talking about living benefits like if you have a terminal illness or if you get disabled, you can actually use some of your death benefit while you're alive. That's a cool living benefit too. But I'm talking about how do you actually use it for retirement? How do you actually really use life insurance as a retirement strategy? All right, so life insurance is just more than being a death benefit if you're buying things like permanent insurance like whole life, universal life, and so forth. Now, when you hear about life insurance and retirement, it's usually referred to as supplemental retirement, right? Why do they say that? I'll tell you this, even though I've had a life insurance license for now going on almost 23 years, I will tell you this, is that life insurance, no matter how you spin it, no matter how amazing it sounds, by itself, I never really trusted that it'll be enough to actually get you to be retired, especially when you have inflation fighting you. You've got the fact that costs do go up every year. It's really dang hard to be able to retire just on life insurance. And the truth is, the industry knows it, which is why they often refer to it as a supplemental retirement plan. I also think they do that too because a lot of retirement companies don't want you to just put all your money in life insurance because that's where insurance companies have their money, right? They don't want you to put all your money there. They want you to put money in mutual funds, put in your IRAs and your 401ks and your stocks and bonds and all that kind of stuff, right? They're trying to get you to buy their stuff too. And that's what I realized, guys, that when I was a financial advisor 20 years ago, I was really just a glorified salesman in a suit. I was somebody who's supposed to be a financial expert, but I was just licensed to sell you something. I wasn't licensed to just give advice. I was licensed to sell you specific things like mutual funds and like life insurance and things like that, but not really to make you more money. And so understand that when they say this, it's really just more of a supplemental retirement, and it can be a great one. Don't get me wrong, but don't think that this is going to be the one size fits all, the one thing that's going to save you, because that's not it. Now I want to talk about another aspect of this too, because I mentioned this before with universal life versus using whole life. This has been a big debate even in the insurance community because you got people, not universal life so much the plain old universal life, but like variable universal life where it's got all the stock market gains and losses. You got index universal life, which has become more popular over the last 20 years, ever since I was using it, even as a financial advisor, before it got popular, right? We got index universal life where you have a floor, there you go, a floor and a ceiling. No, you got a floor and a ceiling in universal life, right? That index universal life. So you can only go up so high, but at least you won't lose money either. At least that's what they tell you. But the problem is this, guys, is that with universal life, especially index universal life, it has changed and adapted over the years. In truth, in reality, the rates have come down. So all the numbers I showed people 20 years ago, they're not getting those numbers. They didn't get those numbers at all because the real rate of return of those things are really drastically overpromise and underdeliver, right? So you can't even trust the numbers coming from universal life. Even though I can do universal life, I can put it on my own self and use it to protect my family, I don't get universal life. One, because there's no certainty behind it. Two, the costs go up every year. So even if you want to use that supplemental retirement, just understand that if the stock market doesn't always perform, you can actually lose money in the policy even before you pull money out. So what happens is that even if they say they pay you the 0% floor, insurance costs are still coming out of the policy, meaning that the value drops of that tax-free savings account, that cash value that's there, right? So the value drops, making it harder to make more money the next year. And that even worse is what if you all of a sudden lose money because the costs are coming out and then you pull money out too in retirement, bam, your balance is a lot lower and you could actually run out of money faster than what they would show you on those little graphs showing you a perfect 6.07% or 0.28% return for 5 million years, right? They show you this like it's always going to do that, and it won't, because the stock market doesn't go in a straight line. It goes up and down all over the place. And if they change those numbers, they change those caps, so there's floors. Guess what? The numbers are obsolete, and you could actually be running out of money in retirement. So what's my weapon of choice, my vehicle of choice? It's whole life insurance. It's always guaranteed to keep growing. Like one of the companies I use a lot of, they've paid between 5.75 and 6.34 for over 15 years straight. It hasn't gone up and down over all those crazy places. It's pretty much guaranteed, right? Even if the guarantees are around like 3-4%, still they're paying more than that. In fact, I'll use insurance companies that have paid above their minimum for the last 175 plus years. Some of them have paid since before the Civil War, before all the world wars that we've had, and depressions, the recessions, and everything else, and they've always paid out. That is something I like to count on. That is something I like to put my money into, because I know I can trust to put my money there, and it's gonna be there when I need it. So how do I use life insurance with my retirement? And specifically, how am I using whole life or this infinite banking method with it? Because like I said, it's supplemental. It's not the thing that gets you to retire, it's the thing to help you with retirement. Now, you may or may not know my story. If you watch this channel, by the way, like and subscribe, because I've got a lot more stories on this. But I was the financial advisor, as I mentioned, but I quit being a financial advisor in 2006 to go do real estate investing, and then I was able to retire when I was 28, almost 29 years old, without really working but a couple hours a week. And so that blew my mind what was possible, right? And even after the recession kicked my butt, I came back, dug out of $1 million debt hole, was able to retire the second time in 2016. So I actually retired twice by the time I was 39. So I know what it's like to have retirement. One of the good things about life insurance is that there's not this age minimum that you have to hit in order to enjoy the retirement. For example, if you're putting all your money in 401ks, guess what? You gotta wait till you're at least 59 and a half years old, or they slap you with this 10% penalty, and then they tax you on top of it. So as a result, if you're trying to get to the point where you're trying to retire at age 60, great, that's awesome if you wanna retire in your 60s or 70s. But if you wanna retire in your 30s, 40s, 50s like I did, guess what? That's not the vehicle you wanna use, right? You wanna use something that allows you to do it. Whole life actually gives you that option to use money now. There is no minimum retirement age for that money. So that's one great aspect of using it. The other thing is this, though, is that I personally don't use life insurance. Like I said, you can't just put all your money in life insurance and expect it to take care of you. It's not going to grow that much, especially with inflation being, I think, much higher than what the government tells us it is. So what I use is I actually use this money with my real estate investments. So see, when I go and buy a property, and I don't buy property in my backyard, I go buy investment properties in different parts of the country where I make more money. I'll use that money for my life insurance. I'll borrow from the insurance company to go and leverage that money to go put a down payment on a property. Then that money, the cash flow comes, and I use that to pay down the line of credit inside the policy. Now, what does that do? Well, the money is still in my account, growing and compounding, tax-free, but over here, I'm paying simple interest. So I actually make a little extra cash over here while also making money in my investment. Guys, I actually make more interest doing that strategy than if I just drained my savings account, did the investment, and then built up my savings account slowly over time to finally earn some amount of interest. I can make money faster and be able to invest more money using my life insurance policy because it pays better interest than my bank will. Even high yield savings accounts cannot compete because they're not tax-free, where my life insurance is tax-free, growing at least 5.5% to 6% per year. I use that money instead. So I use it hand in hand with my investments. So my real estate, and not just that, I go lend my money at 10, 12%. I've got other investments. I got raw land partnership that's been paying me over 30% a year. I've got some properties that on average have been paying me over like 40% a year. Not guaranteed. I'm not saying, all results will vary. I'm not saying you're gonna get that. You could even lose money in real estate too. Yes, I get all that stuff. But I know I can trust real estate as the thing that can actually not just grow my wealth, but generate enough income for me so that I can retire younger. And I don't have to wait till I'm 59 and a half because I'm not using that dumb, stupid 401k, even with the match that really doesn't do much. Just makes up for the bad performance of the mutual funds that you get to pick from, which suck. So as a result, you really don't make any more than you would just investing on your own anyways, even with the 100% match. Another video on that one. So what I'm saying is this, guys, I then use my life insurance to be like that savings account. It's also a great place to store my money that I'm not gonna invest. If I wanna keep my money safe, for emergencies and things like that, I can still access my money inside my life insurance within a week. I can just transfer it over to my bank account. It's very simple to get to. Now, again, I want to invest. I want to go buy those real estate properties. I can invest it in business. I can invest it wherever I want. Heck, I could blow it in Vegas, which by the way is not a good retirement strategy, just so you know. But I can go use that money to make more. So be able to take that money, use that, and then the life insurance works on the side. Now, I'll give you an example. I had a client that he's in his late 20s right now, and he said, okay, Chris, here's my plan. I've got listed out year by year. Now, he already had a few different investment properties that he had been earning rent and cash flow off of. And he says, well, Chris, I'm going to take the money I've been saving instead of putting it in my 401k. I'm going to be using that to go fund my life insurance and also buy about one property a year. Between the cash flow I'm making from those properties and the money I've been saving, I'm going to buy at least one rental property per year from 2023 all the way to 2029. And so he listed it out. Now, granted, it could be more or less. He wasn't even factoring in getting rent raises or anything like that. He was just doing a simple return on that calculation. But he says, look, Chris, I want to get to $5,000 a month by 2029 when I'm in my 30s. Well, I looked at it, I said, well, I can see your real estate hits about $4,500 a month, but you're still $500 a month short. He's like, no, I'm not, Chris. Look, I also have that life insurance policy you set up for me. Even after just about 8 years, look, I can pull off $950 a month tax-free and it'll go forever. And I said, is it really that much? And so I actually ran my own numbers using his current numbers. And he was right. $950 a month is what he could pull out for decades and not run out of money. I said, there you go. You actually got there faster. Again, supplemental retirement. It wasn't the main star. It was just a good supporting actor. It's like that Philip Seymour Hoffman, right? It's like a good one that can win those awards, but you don't even remember his name half the time, right? That's what the insurance is like. It's that good supporting actor that goes along with the star, which could be your investments like real estate investing. Now, if you want to see how you could do more things just like that, I recommend subscribing to this channel, Money Ripples channel, but also go check out our Money Ripples podcast channel, where we've got other examples of how you can actually get these investments working for you in coordination with this life insurance as an investment. Go check that out.